Becoming a millionaire day trader isn't as hard as you think. Well, it's hard until you understand the rules, not of money, but of mathematics, and the secret numbers that will help you in your journey to becoming successful in the stock market. Now, before we get into it, I want to share with you my journey. Also, be sure to check out the link down in the description because we have an amazing calculator that's going to drive the concept home, free to use, and you can download your own profit schedule. Now, I've been profitable in the stock market consistently for a little over 13 years. I have about 15, 16 years experience if you include the times I've blown up my account. How I became a day trader was actually a bit of fate sprinkled with curiosity served over a hot plate of I have no choice. You see, growing up with a hearing impairment, as you guys can see here, I learned early on in life that the world is either going to be mean and pathetic or just flat out not fair. And as a kid, I remember looking out my grandfather's bedroom window, watching the flickering lights of New York City at the distance, and being enamored by the idea of becoming rich and successful and living on the other side of the bridge. New York has a way of making you believe that anything is possible or nothing is possible at all. But at the end of the day, you always feel like New York is telling you the truth. Growing up, I didn't completely feel like I was being told the truth. You know, get a job, go to school, get a job, and life would be amazing. I never saw that work out, at least in my circle of influence. And I get it. It's teachers, counselors, social workers, doctors, all of these people who had an impact in my formative years. They all had a job to do. But like I said, the world can be mean, and I felt that they comforted me instead of giving me the truth. That life just isn't fair. The harsh reality was that with my disability, school was a challenge. It sucked. And I was a workplace liability. I mean, just imagine it just working construction. Someone's like, hey, watch out. And the wall's falling on top of you. And, my life, let's just call it volatile. And I guess that's perfect for what I do for a living now. But you know what? I wouldn't change it for anything. My dad once told me, as long as you have a shirt, a tie, and a comfortable pair of shoes, start walking, because that's the only way you're going to get to where you want to be. Now, my dad was a brash man, a gaudy personality, who meant well in the most fucked up way possible. But when he said something, you actually believed him. You trusted him, unlike the rest of the world. And that I did. Now, fast forward to the years of higher education, heartbreak, and self-discovery, and I decided one day I'm moving to Chicago, knowing not a soul except Michael Jordan after beating the Knicks over and over and over. But my nose was constantly in Forbes magazine, and I came to the conclusion that wealth is usually created in three ways: through business ownership, real estate investment, or financial services. The goal was to scale all three, but how? I'm 25, no credit, no money, a degree in information systems, a half-done software on a USB drive that I intended to sell to mom and pop restaurants, and not having much of a choice, I cleaned up the software, put on a shirt, the tie, and started walking. Setting up appointments, closing deals, luck, maybe, fate, maybe. After grinding it out, I was determined to enter the stock market. Late of summer 2007, I bought Bank of America, AT&T, Apple, and Ford. And my logic was this. Apple had just introduced the iPhone exclusive with AT&T. Bank of America was the bank that I banked with, and the Ford Mustang was iconic. And I thought, hey, Warren Buffett said this, buy companies that you know and love. And I felt like, well, I'm set, right? I'm going to be rich, and then I'll get into real estate, and I'll rub it into everyone's faces. But, boy, was I wrong. I was very wrong. After a few short months of feeling unstoppable, 2008 made me its bitch. Losing well over $50,000, the bitter taste lasted until the summer of 2008, when a buddy of mine, whose family owned a bunch of chain restaurants in North Burbs of Chicago, invited me over to the house. They lived in Kenilworth, and this place was amazing. The epitome of suburbia, mansions, manicured lawns, something out of a magazine. And it was funny because I remember asking him, pizza, did this? Then fate happened. Daddy was a day trader. Privy to this information, I was like, holy shit. So I asked Dad the $1 million question. What's the secret? His response was 0.5, 1, and 1.5. And then someone else interrupted the conversation, and I'm left there like, okay, what's that mean? Are we playing in halves, fractionals? What's going on here? Now, here is the Race to Financial Freedom, the calculator that we linked down in the description. If you have $1,000 and you compound at 0.5%, your financial freedom happens in 1,386 days. If you started with 25,000, that happens in even a shorter amount of time. Now, 0.5% seems rather impossible, but it really isn't. And this is where the next number comes along. Now, knowing what I know now, I probably would have sold and just waited all the way till '09 to get back into the markets. But I earned my tuition in attempting to follow these rules of 0.5 compounded daily and 1%. Now, what is 1%? Well, 1% is the rule of never risking more than 1% of your portfolio in any trade, and this is non-negotiable. And there's a reason for this, and you're going to see how the formula all comes together. You see, if you have a $10,000 portfolio and you risk 1%, you're only risking $100 per trade, which then sends me on over to the next concept, the next number, which is 1.5. So what we do each and every morning in a private stream with our traders, we design profitable entries so that our traders are aware of the risk to reward profiles that are necessary to be profitable. So let's get back to the chart here. As you can see, we have our proprietary traffic light signal here, and you have the 24 EMA. Now, this is something every trader must do, but they don't. And as they say, you fail to plan, you plan to fail. So let's take a look at this. We are going to take a short position at the break of the 24 and our first signal with a traffic light. This will be our entry. Now, we have a profile that has a 1.07 risk to reward profile. We want to be able to manage our risk accordingly. So we have our risk, our stop, set at 457.78 with our take profit at 455.94, going short or buying a put option. Immediately you see that this risk profile is 1.82. This is a favorable risk reward profile. So again, going back into it, if you are risking $100 on the trade, you're expecting to make $182 on the trade. Now we find that using this strategy and being disciplined and having the expectation that all you need to do is earn 0.5% on your portfolio each and every day, guys, make sure you check out that compound calculator, because this is really going to open your eyes. 0.5% is the minimum that we advise our community. This is your goal on the daily basis. Now, you're not going to go ahead and hit 0.5 every day. You might have losing days. You might have a day where you hit 1.5. You might hit 2, might hit 3%, might hit 10%. Where it averages out is where it's most important. Again, mathematics is more important than the excitement and euphoria and the dopamine shot that you get from actually making money and making a lot of money. Again, you want to make sure that you're multiplying your wealth as opposed to playing the lotto in the stock market. That's what the stock market exists for, wealth multiplication. And the stock market's going to show more of who you really are. If you're impatient, it's going to show you. If you're timid, it's going to show you. If you're greedy, it's going to show you. So just subscribe to this ideology. 0.5% compounded is your goal. 1% is the most you're willing to risk on a trade. So for instance, if you have a $5,000 port, you're only risking 500. If you have a $10,000 port, you are risking $100 per trade. If you have a $25,000 port, you are risking $250 per trade. Now, this doesn't mean that you're using $250 to enter the trade. It just means that if you entered the trade with $1,000, your stop has to be set at 10%. 10% of $1,000, that's your $100 risk. I hope this video makes sense to you. Make sure you guys like, share, subscribe, comment down below, and let me know what you think. There will be more videos like this as I expand upon my strategy and I share with you my journey in more detail and how I have been able to amass millions over the past decade. And again, it's just very, very simple mathematics. And until next time, peace.